Appreciate you checking out another video here from NetPicks. And on this video here, I want to talk a little bit about breakouts. Not necessarily how to trade them, but just to help better understand what a breakout really is. Okay, and it does seem pretty self-explanatory, a breakout. But there are still a lot of people that are confused as to what a breakout really is. Okay, there's also some price action that traders will call a failed or a fake breakout, when the fact is, it probably was not even a true attempt at a breakout. Now, I don't blame traders, okay, because there are a lot of terms that are tossed around. There's a lot of poor information and really just an overall lack of some really decent education in trading, just the simple things. So I want to talk about breakouts, strip away some of the myths, and let's take a look at what breakouts truly are. And to start with that, let's talk about what a breakout is not. Okay, it's not price crossing a moving average. It's not the break of some mathematically calculated pivot point. And it's also not just price continuing the move, okay, making new highs or new lows. Okay, now that's not to say you're not ever going to see any moves through these types of technical features exhibit this kind of breakout behavior. Okay, but often it's going to be that they coincide with structural features, okay, price structure when they do that. So breaks from a price structural aspect. That's when price moves through an area which has already been tested. Prices previously moved away from it. And they are generally more significant when that move away from the test area is clean and fast, right? So it's an obvious rejection of the level. Now the reason for this is that it indicates a greater level of change when the break does eventually happen, okay? Because something new is happening. That's what breakouts are really about. Terminology, it does make a difference, and oftentimes it can be the basis for any confusion. Okay, a level can be taken out, a market can undergo a behavioral change, and it's the last one that I see is typically defined as a breakout. Now, a level being taken out might only mean a continuation of the same market behavior, right? Like the new highs here. The market's just moving up. Of course, that's still relevant to a trader, but it doesn't really constitute a breakout if the market's just doing what it was just doing previous. But if you think about a change in behavior, okay, that's when you see the market is really breaking away. Now, typically, this is when a market goes from some type of trading range, okay, and that changes from a range to a trend. It can happen as specific price level, or it can happen at a structural reference point, like a trend line, for example. Now, the trend line is a reference point, okay? Price is not actually breaking from a trend line. It's just a reference point. So let's talk about higher time frame. So what about a pullback and that continuation? Is price not breaking out to the new high or low? Not really, because the market's reversed, right? It's just continuing in that trend direction. But if you go down to a smaller time frame, you will see patterns that have broken out during the higher time frame continuation moves. But our goal generally is not to capitalize on what the smaller time frames are doing. It's to ride the wave of the higher time frame. And the reason why we want to do that should be pretty clear. Because directional trading in a time frame that's higher than the one you're going to execute on is going to carry the market in your time frame. Right? The higher the time frame, generally, the bigger the moves. Does that make sense? Well, who moves the market? Not your individual retail trader. And even if we add all the retail traders together, there isn't, depending on the stock, for example, there's not enough to push the market. But the bigger players, the banks, the funds, they have to look at higher time frames. Because if they didn't, how would they be able to execute the sorts of volume that they do? They're looking to execute 1,000s, 10,000s, a lot of contracts, right? So to get in and get out in the same area would be pretty difficult in such a short space of time. Think about them trying to execute 1,000 contracts on a 5-minute chart. That's just going to send that price flying. Then it's going to cause them to buy at higher prices. That's not what they want to do. If they're unloading positions, can you imagine them dropping thousands of contracts on a 5-minute chart? That result would just be horrendous for them. Okay, so recognizing where changes might occur in a higher time frame, That's more likely to be able to carry your trades if you manage them well. Okay, so what's a true change in behavior? Well, you have to really consider what constitutes an actual change in behavior, because markets are elastic, right, to a greater or lesser extent. So in terms of a break at a specific price level or an opening range breakout, a market moving through a level does not automatically confirm this, okay? Market going through a level can signify a break, an extension, a breach. So a break, this is where price moves beyond an area and continues in that direction. Okay, often what happens, but not always, okay? A breakout will be accompanied by an immediate retest of the close to or the actual price it broke out of. And when this test holds, that's where losing positions are covered, new positions are opened, just propels the market further in the direction of the break. What about an extension? So this is where price clears that level. Okay, we would consider it a reasonable amount for whatever you're trading in the time frame you're looking at, but then it reverses back, and then it continues with the action that was defining it before the attempted break. Think about a broadening formation, right? Same thing. It'll make a higher high and then make a lower low. Just price is extending. A breach. This is similar to an extension. It's just that we don't get an extending range, right? It doesn't go very far. So you don't really get much of a retest. So there's far less likely to be a pullback type of activity, okay? There's not enough room between the extreme and the initial break for this to happen. As you can see here on a lower time frame, you would just see a cluster of candles in this particular zone. So what is a breakout then? Well, having a concrete definition of a breakout is really important, especially if you're trading range breakouts, for example. So let's define this. A breakout is a shift in energy and type of movement that causes real behavioral change in the market. When you recognize when and where these shifts are more likely to happen, and knowing the types of action that are likely to be seen when these are really taking place, that can actually help you capitalize on potentially really good trading opportunities. So just take the time to really understand what we just talked about, okay? Gain a better understanding of breakouts, and then start looking for strategies where you can take advantage of this. Thanks for watching. Hope you liked it. Any questions, comments, need some clarification, pop them in the comment section below. Feel free to subscribe. Hit that thumbs up. We'll talk to you soon.